Bloomberg Audio Studios.
Podcasts, radio, news.
Single best idea of what we do years ago at Bloomberg on the economy, Bloomberg Surveillance, and it's about the conversation. Today was fabulous. Birthday greetings to Liz Ann Saunders of Charles Schwab. She emphasized you have to be in the market looking at the stresses of fear. You can't go up unless you have fear. I'm a big believer in that. The fear's there right now. I'm not saying we're going to go up, but the fear is there, centered around this Fed decision tomorrow. And Liz Ann Saunders was wonderful about participating in the market. Barbara Reinhardt of Voya, same thing. Buy America, buy quality. Maybe there's some movement internationally, but she really stayed on the U.S. theme and said what we saw from Microsoft, a 10% dividend increase, reaffirmation of a new $60 billion share buyback. You look at the ratios on the Bloomberg terminal of Microsoft, and you just wonder, okay, a year and a half, 2 years from now, do they do the same thing? It's just that simple. Three great voices today. First, Geoffrey Yu in from London with BNY. Geoff Yu on what he sees as the distinction, American exceptionalism.
America believes in its people. America has people, has the talent, and continues to attract that. That is the fundamental difference. Yes, there's a bit of a demographic argument there, but how it fosters productivity through innovation, that's a lesson Europe badly needs to learn. Look at the Office of Budget Responsibilities report. Based on their baseline scenario right now for UK productivity, and this is the power of compounding, right, has UK's debt to GDP ratio in 2075 at 270%. If you lower the productivity baseline by 1 percentage point, it goes to 650%. If you increase the productivity baseline by 1%, and the baseline is 1.5, so to 2.5, which probably the US is not far from, then you can keep debt to GDP ratio below 100%. That's what the US has going for it.
The mathematics, Geoffrey Yu there on productivity in America. Of course, productivity, a key discussion. He was on the United Kingdom there, and the productivity of America, a key discussion, and really comes down to a core belief of moving 25 or 50 basis points. Michael Darda of Roth.
I think what the Fed is doing now is simply hyper data dependency, which carries its own risks, right? So the forecasting approach blew up in the Fed's face with the temporary transitory and inflation taking off and staying high for 2.5 years. And so they've sort of receded into this posture where they're just looking at the data. And, that can work as long as you're not at a turning point. The problem with just simply being data dependent is the data is released with a lag and then it gets revised. And when you're at turning points, you tend to get a lot of mixed data. And right now we have mixed data. If you look at GDP, everything looks fine. If you look at payrolls, we're slowing. If you look at the unemployment rate and underemployment rate, it looks like we're in recession. And so from that perspective, hyper data dependency can lead the central bank to behind the curve policies. And, that's really what you want to try to avoid.
And not mentioned there is we really don't know about productivity until a look back of 3 years or 5 years. Some would even say 10 years back. The mystery of post-pandemic American productivity. There is no mystery to how Ed Hyman invented modern market economics. I've always called it chart paragraph. Ed Hyman looked at the charts. He looked at the paragraphs of data at Evercore ISI. He listened to his team, including Julian Emmanuel. He says, I'm on the recession watch, but it hasn't happened. Ed Hyman 10 days ago, now he makes a shift and becomes more optimistic on the American economic experiment. Ed Hyman of Evercore ISI.
If they don't do 50, I'll be shocked.
Okay.
Because I've been at this so long, and the Fed picks out somebody like Timorous to communicate, frankly, to me and you. This is not a situation where they're peddling their own view. And Timorous has said over and over the Fed is going to do 50. And if they don't do 50, I'm going to have to go back.
So Ed Hyman there on the sensitivities. Let me explain this as we go out. there's a sharp criticism, and I'll be honest, my colleague John Farrow was way out front on this. Maybe it was because they do it differently at the Bank of England, but John Farrow absolutely nailed this. The idea is that they're whispering out to select reporters, including the wonderful Nick Timiraos at the Wall Street Journal. Colby Smith's been tarred and feathered in the last number of days at the Financial Times as well. And I don't have a strong opinion on it, other than I will state, as we heard from Michael Darda, that they are excessively data dependent. We're dependent on giving you conversation. We'll do that tomorrow. Of course, the Fed decides at 1:30 tomorrow afternoon before a fascinating release of the statement and a fascinating press conference. Our Michael McKee will be leading our coverage there. When you commute, we're on Apple CarPlay, Android Auto. Good morning, 99.1 FM Washington, Bloomberg 1130 in New York City, our flagship network, and 92.9 FM in Boston, on Apple Podcasts, on YouTube Podcasts. This is Single Best Idea.